good weekend. So this is another market outlook trading video where I want to run you through the biases and the key levels to focus on. Now we just came out of a very difficult week. So as you can see right here, we actually lost money this week. So we don't hide this from you, we just tell you upfront that we lost money this week. This week has been a very difficult week, and in a moment's time, when I look at the charts, I want to show you why it was so difficult to trade. Now, as always, for this market outlook trading video, what I'll be doing is I'll be using the MPE trading strategy. So if you are new viewer of our channel, right, and you have not yet gotten our day trading guide, right, please go get this guide, because if not, you will not understand how we analyze the market in this market outlook video. Okay, so in essence, the MPE trading strategy stands for market condition, price level, and entry. Now, I cover all this in the free day trading guide, okay, and there's also a lot of other nuggets of wisdom like the 4 stages, the candlestick patterns, okay? All this is totally free. Just head over to the link in the description down below. It'll take you to this website right here. Just come over here, input your email, and then you will get it, okay? So I'll be using this. Now let's start our analysis proper. Okay, the first thing that we always do is that we look at the Forex Factory Economic Calendar. So today is the 30th of May, and I'm planning ahead for the trading week of 31st May to 4th of June. Okay, so for the first thing to note is that on Monday, we have the pound and the USD bank holiday. So what this means is that there's not going to be a lot of volatility in the market, okay, because the market is not open. For this reason, please do not be so anxious to trade on a Monday, okay, because it's likely that price is not going to move in a big manner, okay? I could be wrong, but this is just something to take note of. The next thing that you should take note of is the RBA rate statement, which belongs to the Aussie currency. And of course, right here, you have this speech. Okay, I hate speeches because speeches is where the market goes crazy and it's very difficult to trade. And of course, you have the ADP non-farm payroll right here, and this one as well. One more thing is that we have 2 more speeches, okay, and 2 important speeches here, and then all these are all speeches as well. So bottom line is for next week, there are a lot of speeches. So what this means is that it's going to be very difficult to trade, right? Because as I mentioned, okay, if you always watch our videos on YouTube, you know that I always say the same thing. I always say that when there are speeches, what happens is that the market cannot predict what is going to be said in a speech. Okay, for example, during the speech, you might have a visitor asks a question about something, and then the chairman just replies, fires from his hip and starts saying something, and that moves the market, right? There's no way to predict what question is going to be asked. There's no way to predict what the reply is going to be and how the market will react to it. So for this reason, most of the time, the market doesn't move in a very decisive manner, and that's also why big institutional players don't like to put in big orders just before these kind of events. Okay, so it's very difficult to catch a good move. Okay, even if you catch a good move, you need to be very patient, and most of the time you probably get whipped out even before the move starts. Okay, so hopefully that's a better explanation. I think I just took a little more time today just to explain to you how the Forex Factory analysis work. Now, before I jump straight into the analysis for these currency pairs here, right, if you are a new subscriber to our Telegram channel and you have not yet hit the subscribe button on YouTube channel, please do that, okay? We have a lot of trading videos on YouTube, okay? We don't charge a cent, we don't need your money, right? Just make sure you hit the subscribe button, right? Watch the videos, especially if you are a new beginner, okay? There are many lessons on this YouTube channel which cost us a lot of money to learn, and we are making it free for you, okay? So please hit the subscribe button. And if you are a YouTube subscriber and you have not yet joined us on Telegram, okay, you are missing out a lot, okay? You can see that we send out a lot of wisdom here. In fact, we even send out free trade signals like this. So please join us. Again, the link is in the description. Now let's go into the market analysis, okay? So the first thing that we always do, if you refer back to our MPE trading strategy, is market condition, price level, then entry. So let's look at the market condition. Now, last week, I talked about DXY. I said that DXY is potentially going to bounce up. Okay, so if you didn't watch that, you could potentially go back into last week's market outlook video, and you can see that this was what I actually said. And true enough, price struggled at this level and started pushing up right here. Okay, so this support is valid, and price hasn't really retraced all the way up here, which I think is a very strong level. Okay, so market condition is definitely bearish because you have a swing low here, swing high, swing low, swing high, swing low. Okay, so we have a series of lower lows and lower highs. Now, why it was so difficult last week was because price was just consolidating right here. Okay, it's not doing much. So for most of the currency pairs, it was very tricky. And even on Friday, okay, it seems like a breakout of this entire zone of so-called range bound trading. But look what happened to the market after that. Okay, price traded above. If you were to go into the H4, you can see that this is a very ugly looking shooting star. So what a shooting star means is that a lot of traders actually traded this breakout, and they got stopped out, or they are currently in the red right now. So it was a very, very nasty market situation, and that's why in our signals, if you were to look at it, we actually took lesser trades than usual. Okay, we tried to cut back on our trades because the market just had no momentum and it was just very whippy. Okay, so this is a very important lesson to learn in trading. When your edge is not working, okay, do not force it. Just sit it out and just take some time to go step away from the market, right? Go away and come back again. Okay, so moving forward into this week, I feel that price probably has room to retrace higher, okay, just that it might be a bit slow. Okay, ultimately I want to look at this level, okay, to look for a short. Okay, again, you may not short directly into DXY, but right now DXY is in the middle of nowhere. Okay, so what this means is that dollar is unlikely to go anywhere, okay, because DXY represents dollar. So dollar is probably not going to go anywhere. So just be very careful if you're going to trade currencies like euro dollar, pound dollar, and all the dollar currency pairs. Now let's look at euro dollar. Okay, euro dollar, also similar thing, but let me just break down the market condition first. Now, market condition is bullish because you have a high here, you have a low, you have a high, higher low, high, and potentially a higher low. Now, same thing as DXY, it was a pain in the ass to trade this because it's just consolidating, right? And right here in the lower time frame, you can see that right here, or rather on this time frame, there's some spike. There's a high here, there's a high here. But if you were to go into the the H4 chart, you will see that this is actually a breakout in the H4 chart. Okay, so what happens is that a lot of traders buy the breakout. I think we also got caught in this breakout, if I'm not wrong. Can't really recall if we traded this, but bottom line is that it's very tricky. So what happens is that price close above and then just smash the price back down. Same thing for the low right here. Okay, this is your support. Price just did a very nice ugly bearish bar right here and then totally reverse it. Okay, so this is why it was so difficult to trade, because if you are trying to chase momentum and you buy here, okay, you're gonna get stopped out. If you sell here, you're gonna get stopped out as well. Okay, so our strategy revolves around momentum trading. Okay, at least the signals in our Telegram channel right here, it's momentum trading, and therefore it's not suitable for conditions like this. But anyway, back to the MPE trading strategy. Okay, market condition is definitely bullish, so we want to buy. Right now, this is the next key level, and you can see that on Friday, price didn't actually close below. Okay, so this support level is still valid. You can see, in fact, on Thursday, price almost tested it, and then it didn't close below. So this level is still valid. Now the only challenge is that the resistance level is quite close to right here. Okay, so if you were to do something like this, okay, if you take a trade that looks something like this, just like that, then the risk to reward will not make sense. Okay, so I don't recommend this. Okay, if you really want to trade this, then I recommend maybe trying to tighten your stop loss, something like this. Okay, then it probably makes sense. Okay, so just remember, the first thing we look for is market condition, which is bullish. Second thing we look for is price level, which I've given you right here. Okay, just scroll back, you can see that this is a very strong price level. Okay, switch to the line chart if you can't see it. Okay, this is a strong level, strong level, strong level. Okay, strong level here as well. Okay, and look for an entry trigger. Okay, again, this is all provided in the day trading guide, but I just want to use my experience to share with you the key levels to focus on. Okay, because this is still theory right here. It doesn't show you how to do it in real time. Okay, so this is real time before the market actually moves. So just take note of this level. This level, ideally, if this level is broken, then we look at the recent swing high, which is right here. Now let's go on to pound dollar. Pound dollar, it's a currency pair that I don't recommend trading for next week. Okay, you can see that price is trapped within the box right here. Okay, but in terms of market condition, it's definitely bullish because you have a high here, you have a low, you have a higher high, higher low, higher high, higher low, higher high, and higher low. So we are in a bullish market condition. Now, the problem is that this level here is holding, then this level here is holding. Okay, so right now, this range is quite tight. So I don't really recommend trading into this zone because, like, let's say you wanted to buy off this zone and this was the confirmation candle, right? Because this is the engulfing pattern. By the time this engulfing pattern happens, it's almost at the top. Okay, so there's no more range, there's no more meat left in this trade. So for this reason, I don't recommend trading this. And I look at this based on my experience. I believe what is likely to happen is that price might just do something like, just break down a bit lower first and then go back up. Okay, because there are a lot of stop losses right here, just below the lows. A lot of them trade this range. So they place their stop loss here, and the market makers or the big institution know this. So what they do is that they want to stop you out first, right, by pushing price below, then eventually going buying it up and breaking out of this pattern. Okay, so if you want to trade this, what I recommend is that you wait for price to break below the low. Okay, wait for it to break above, let it retest here with a candlestick pattern, and then try to get in with a small tight stop loss of something like this. Okay, maybe something like this, and it might still make sense. Okay, the risk to reward is not the best, but at least you are not chasing after the market and you are not like buying into resistance. Okay, at least there is some meat for you to capture when you enter it like this. So just be very careful about this currency pair. Now let's talk about dollar franc. So dollar franc is actually the opposite of euro dollar. So if euro dollar is up, then dollar franc is down. Now, this one also illustrates why it was so difficult to trade last week, or rather this week, the week that has just ended. You can see that on Thursday right here, you have this very nasty spike, right? This is like a shooting star, and then after that, you get one more of this right here. And this one is actually closing right into resistance. You can see that this is the recent swing low, and right here, this is another nasty swing, or rather nasty spike right here. So what happens is that a lot of traders, when they see this, they traded the sell, right? Because you're at resistance, and it looks like a nasty spike out already. So a lot of traders say, okay, all the stops has been flushed. The people who place their stops above this swing high here would have been stop out. So let's go short. But no, the market wants to be a pain in the ass, and what the market did was that it did it one more time. Okay, they wasn't happy with all these people being killed. They want to kill people one more time, so they push up price one more time. Okay, so this is why it was so difficult. And on the close on Friday, you can see that price didn't actually close above this swing high here, or rather this spike high here. Neither did it close above this low right here. Okay, I just switch to a line chart. Neither did it close above here. Okay, so price is still resisted, but what price did was that it spiked out those traders who placed a tight stop loss, okay, who tried to short here and didn't have a very tight stop loss. So overall, the market condition is still down. Let me show you. It's still down because we have a low, we high, lower low, lower high, lower low, lower high. So it's still bearish. Just that the market is good. It's very difficult to trade, right? It wants to keep consolidating and keep spiking people up. So just be very careful, okay, if you want to trade this. But this level is still valid resistance level. And of course, if this level is broken, then this level is next, which is over here. Okay, just take note of this. Now Aussie dollar is another complete mess. Okay, you can see over here that this entire price action actually resembles a head and shoulders pattern. So let me show it to you. Left shoulder, head and right shoulder. Now this entire pattern is very ugly, and you can see that there are a lot of wicks. Okay, there's a lower wick here, there's a lower wick here, and lower wick here. Okay, so the market condition is more bearish because this is a reversal price action pattern. Okay, I'm more leaning towards the bearish side, but however, please take note of this. This is very important. There might be a tendency that price just hover like that, up and down along this level. So please do not trade the breakout of this. Okay, I think it's very important not to trade the breakout of this, because we've seen multiple times that in the lower time frame right here, price has actually broken a level. Okay, you can see price has broken a level. In fact, on Friday as well, price broke the level and then only to close back above. So please do not chase a breakout. Okay, a better way to trade this would be, I want to see a clean break of this level. Okay, what do I mean by clean break? Maybe if price can close somewhere here, somewhere here. Okay, the lower the better. I want to see a clean break in the market structure, and then I want to look for the retracement up. Okay, and then of course a price action candlestick pattern here, and then I'll take the short down. Okay, something like this. But please do not trade the breakout. Okay, it's very risky. And hopefully, you know, if we get a retracement up, it probably coincide with this trend line. Okay, let me just adjust it. Something like this. If you can retrace, then you have additional confluence, right, to make this a very good trade. Okay, but for now, right, just be patient. Okay, I do not know whether it will break or it might just start bouncing up to here. I don't know, but just be very careful. Now, Kiwi dollar. Kiwi dollar is a bit clearer than Aussie dollar, but I still don't like it, okay, because it's trapped within this entire trading range. Okay, so one thing to note is that the market condition for this is more bullish because we have a swing high here, swing low, higher low, higher high. Okay, and there's this ascending trend line right here. Okay, so on Thursday, this is Friday. Thursday, price failed to close above this high. Okay, in a lower time frame. Again, the same thing happened. The price closed above and then after that start selling back down. Okay, so same pattern. This whole entire week, this keeps happening. So if you trade momentum, then the only way to do it is to cut your losses fast, which is something that we tried to do. Okay, so nonetheless, this on Friday started selling down. Okay, right now price is in the middle of nowhere. So ideally, market condition is bullish. Price level is somewhere around this ascending triangle. Ascending trend line, sorry. There's one more lower level which actually is more like over here. Okay, so what happens is that price might spike this level, look for a candlestick pattern here, and then you can take the entry. If when it comes here, you can take some profits. Okay, you can take full profit, or you can choose to shift to break even and look for the swing high here as a bigger profit target. Okay, so that's how I would trade. The other situation would be if price breaks above, just wait for the retest here, look for a candlestick pattern, and then take the trade to target the recent swing high right here. Okay, dollar CAD. Dollar CAD, it's another complete mess. Okay, because you can see that it's consolidating right here. So this is your resistance. It's very clear why this is resistance. You can see that it was resisted once, resisted twice. This level is supported, right? If you were to scroll back a bit, okay, scroll back, you can see that this is actually entire zone. Okay, let me just zoom in so it's clearer. This is actually entire zone of support. Okay, I would say that this is entire zone of support. I would cluster them as one entire zone of support. So right now price is at support. Okay, one thing to note is that we are very close to the psychological level of 1.20. Okay, so 1.20 is a whole number. Now, if you've been trading some time, you will know that psychological levels are very strong. It's very difficult to break. Okay, so we are very close to this. It's very difficult for you to make good money if you are shorting somewhere here. Okay, it's very close to support. So what I would prefer to do is I would prefer to trade a reversal. Okay, I prefer to wait for price to make a kind of like a confirmation of the double bottom pattern, break above this first bottom, second bottom, the neckline, break above it, retest it, I look for entry here, and then I look for a long. Okay, I don't want to short into support, especially this is a very strong support. And even if this support breaks, remember I mentioned that this is an entire zone of support. Okay, this is an entire zone. So just because this level is broken doesn't mean that price will start breaking down. Okay, price might potentially do something like this. Okay, and start rebounding strongly. So just be very careful about this level. Okay, we are very close to support already. Now, dollar yen. Dollar yen market condition is bullish. You have a high, low, high, high, higher low. In fact, this looks a bit like an ascending triangle. Okay, ascending triangle, and then the first swing low here, you can see that the buying pressure is very strong, and the second swing low here, the buying pressure is also very strong. Now, on Friday, price didn't give a very conclusive close above this swing high right here. Okay, if you look at the close, it barely closed above. Okay, so personally, I'm not too convinced that this swing high is broken. Okay, so normally when you do not see a clear price action like this, that it is closed above, then price will start retracing. Okay, so this looks more like a shooting star to me. So just be very patient. Just wait for price to retrace and look for a trade setup here. Okay, price level will be somewhere here, and then look for a price action candlestick pattern, and then just take the trade. Okay, again, this is a level, so even if you buy here, right, price might potentially do something like this and come back down. So you definitely want to lock in some gains here, or at least shift your stop loss to break even when price hits this level. Okay, now, gold. Gold was a trade that I talked about last week. Okay, personally, we do not send out gold signals on our Telegram channel. Okay, because this one, a lot of people mistrade it. So normally we don't like to send this and factor that into our trading signals. Anyway, we talked about taking the trade somewhere here last week. Okay, if you forgot about this, right, just watch our last week's market outlook video. Right, we're talking about this, and we were saying that there's a lot of space for price to close here. To travel towards here. Okay, sorry about that. So for price to come all the way to here. So same thing, the buyer still stands. Okay, we're still looking bullish, but there's an intermediate level right here, which let me just delete this, which on Friday actually the low was tested. Okay, tested this entire zone of resistance turn support. Okay, so a potential setup coming Monday would be to do something like this again. Okay, just do it like that. Okay, so this one, the market condition is very clear uptrend, right? It's high, low, high, 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 low, high, high, higher, low. Okay, so I won't spend too much time on the market condition. Price level I've given you right here, and in fact we have this pin bar. Okay, pin bar right here. So this is a good setup. So actually you can potentially take the trade on Monday. Okay, and just set in your stop loss below and target here. You get a decent risk to reward. Okay, please make sure to control your lot size, because the lot sizing for gold is different compared to a currency pair like euro dollar. So just be very careful with that. Now, euro pound. Euro pound, we see a head and shoulder pattern, or rather like a double top pattern as well. Left shoulder, head, right shoulder, or if you were to just see it as a double top, then this is the first top and this is the second top. Okay, and we also see a descending triangle. Okay, you can see that price, it's there's a descending triangle. Okay, more importantly, at the top of each descending triangle, you see some strong selling pressure. Okay, you can see a very strong selling pressure here, strong selling pressure here, and strong selling pressure here. Okay, this was a concept that I taught in one of the previous Forex trading tutorial video. I think it's called a high probability momentum trading strategy, if I'm not wrong. Basically, I show you what is the structure within the structure. I show you how to break down the structure within the structure, and this is an example of this. Okay, so I will not cover that in this video because this video is a bit long already, but I want you to just be aware that this is a descending triangle and the selling pressure is down. Okay, so market condition wise is definitely bearish. Okay, because you have a high here, you have a high, low. Okay, this one about the same high. Okay, lower low right here. Okay, and you have your head and shoulder or double top pattern right here. Now, price is at support. Same thing. On Thursday, price closed below, barely closed below. Wasn't a very clean break. Then it started rebounding. Okay, so on Friday it just closed slightly above. So again, this is not conclusive. We do not know whether this level is broken or not. Okay, so I'm not going to assume that this level is broken. So my advice would be, if you really want to trade this, okay, this is a higher risk, not higher probability, higher risk setup. Is just wait for price to retrace somewhere here. Okay, once price retrace here, look for a candlestick pattern and then you short it down. Okay, when price comes here, you can take some profit, or you can shift your stop loss to break even and ride it here. Okay, because this is a very strong level. If you trade the breakout, what might happen is that price might just come back a bit lower, because remember, there's this swing low right here. Okay, and you know, it starts coming right up like this, and then you get stopped out. Okay, so just be very careful. This is my ideal way of trading it, but it may or may not happen, and this is higher probability because this is kind of like more of just a trend line play, or rather you're selling even before the descending triangle confirms itself. Okay, so higher risk if you are a beginner trader, right? Do not trade this. Okay, this is only for more advanced traders. Now pound yen. Then I'll end off with Nasdaq 100, because we've got some requests about doing analysis for Nasdaq 100. Okay, so by the way, if you have any other currency pairs that you'd like me to analyze, just let me know in the comments down below, right? Then in the next week's market outlook video, we can consider doing an analysis of it. Now, pound yen is a clear uptrend. Okay, you have a high, low, higher high, higher low, so market condition is definitely bullish, so there's nothing to talk about, nothing much. Now price is in the middle of nowhere already. In fact, price is very close to resistance. Okay, let me show you where resistance is. So resistance is just this swing high right here. Okay, so right now price is a bit too high, so if you didn't take this trade, you didn't catch this, then just wait for price to retrace down. Then look for a candlestick pattern and just take the trade. Okay, so very simple setup. This is the kind of setup that I recommend that you focus on. Okay, because it's very clear, it's very simple, right? The trend is clearly bullish, and the key levels is very clear. It's just this recent swing high right here. Now lastly, Nasdaq 100. Nasdaq 100 is a bit more challenging. Okay, so bear with me while I go through this analysis with you. So I think the market condition is more bullish because you have a swing high here, you have a swing low, and you have a higher high. Okay, in fact, this descending trend line was broken and it was retested here as well. So for this reason, my bias would be bullish. Okay, now right here, let me just delete this. Right here, we have actually a left shoulder. Okay, this is like an inverted head and shoulder. Head, and what I'm looking at is a potential right shoulder. Okay, now this level right here is also very strong, because you can see that this was a swing high, this was supported. Okay, and right here as well. Okay, right here as well, this was supported. So this is a very strong level. Right now price is resisted at this swing high right here. Okay, this was support and resistance. Okay, so this is a very strong level, so please do not buy into resistance, right? I don't recommend selling right here as well, because the market condition is bullish. Okay, so if you are a struggling trader, right, there's really no reason why you should be selling in a bullish market environment, right? Remember the day trading guide, I say it very clearly right here. If the market is in an uptrend, you should be looking to buy only, and of course if the market is in a downtrend, then you should be looking to sell only. Okay, do not sell in a bullish environment like this. Okay, one more thing to note is that there is a kind of like a trend line as well, so this will act as a form of confluence when price bounce back down here. Okay, so just be very careful about this level. Again, if you buy here, just be very careful that this might act as resistance. Again, take some profits or shift your stop loss to break even, and then you can aim for here as your final profit target. Okay, so that's all I have for you prepared in today's market outlook video. I hope you got a ton of value. Right, remember to get your free day trading guide. Again, it's free. Okay, the link is in the description. There's a lot of value. Just input your email, and then our email autoresponder will send it to you directly immediately. Okay, so if you have not yet joined us on Telegram, okay, next week is another new week. We're going to start the month of June. Okay, you're going to get a ton of value there. Again, it's free, right? There's really no catch. Just join us there. It's free. You're going to get our signals, right? We'll show you what we trade, where the entries, where the stop loss is, where the take profit is, right? Something like this. Okay, so definitely join us over there, right? Make sure you subscribe to the channel, this YouTube channel, if you have not already done so. If not, thanks for watching, right? Trade safe, manage your risk, and we'll see you in the Telegram channel.